I'm going to walk you through my smart money structure today so you can be right 68% of the time. Now, if anybody is telling you in their videos that they're going to show you a way to be correct with your bias 100% of the time, walk away, because there's no way, there's no system that will be right 100% of the time. Now, if you still need support, then I do suggest checking out the full 90-day fix program. We'll actually open up a few more spots come the 1st of August. So if you want to check that out, there's a link below in the description of this video. We're going to walk through gold. I'm going to demonstrate to you first the actual process of using this smart money structure, and then I'll walk through those charts, showing you how I end up taking a 1-minute trade this morning using this process, and you can see why this works using this structure. The first thing I'm going to do is just briefly walk through the two different ways we look at this structure. One, we can have a bullish trend in the market, and two, we can then have a bearish trend in the market. So what we can see a bearish trend as well, continuation, and we look at these in two different ways when we're marking out our structures. The reason is when we're in a bullish trend, we're going to have a specific way we look to mark off what we call a valid high and a valid low. Now, what I mean by this is we're going to have a potential break of structure in the market. Once we have our break of structure, we can then look for our valid low, and then we can start looking for a valid high to be created. And so we break back and we break structure again, then we can look for a valid low again. Now, the same is done on a bearish market, but slightly differently. We also get the valid break of structure where we then look for a valid high, then look for a valid low, a new break of structure again, and look for a valid high. Now, this may seem exactly the same, just in the opposite, but the way we mark this up is not the same. So stay with me as we go through this video. First, we'll go through this daily chart on gold, and then we'll demonstrate to you exactly how you apply this. We'll work our way through to that entry today on a 1-minute time frame, so you can see how you're going to be right 68% of the time. So I'll go through now on the actual candles, how we would look at this, because it's going to be hard to demonstrate on these areas. So we're going to zoom in to these candles, and I'll walk you through quickly step by step the way we look at marking these up, and then we'll go through the charts, how we mark up that structure all the way down to that 1-minute entry, so you can see how I call that today. So when we look at our break of structure, this is the first thing we're going to look at here. Is we're looking for a candle to close through the previous high. This candle closes through that level, creating a valid break of structure. Now, when we're in a bullish trend like we are here, the process we look for a valid low is we're going to look back for the last time we see a candle closing down. And that's right here. This candle closes below this candle's low. That gives us a valid candle to then look for our valid low, which we mark here. Now, as that's a break of structure, that's how we look for a valid low when we're in a bullish trend. And that will give us our strong low in the market for the daily. Once we've achieved that, we continue to watch price. Now, for a valid high, we're doing the same process here, but we're just looking for a valid high with a close down. So like we saw the close down here, we continue to follow price until we see a close down. There's our first candle. So we can mark off this high. Why? Because this candle closes below this candle's low, continues to close down. Now, this is going to be marked off as what we call a weak high in the market. So I'll just mark this off as a daily weak high. And the idea is understanding this structure as we expect to pull back into this area of discount when we're looking for potential buys to run back for this weak high. But this is the way we look at it, actually marking out our swing high, swing low in that structure. Now, instead of going down to lower time frame here, I can easily show you again how we mark this off on a bearish market by looking at marking out an internal structure. Now, the way we mark out an internal structure is very simple. And what I can identify, I'm going to mark this off as a dashed line. When we see this pullback, and then we see a run to downside. As soon as we see this break to downside, this is an internal structure shift for me. And to look for our actual high, we look back for the last time we see it close up. So this time, this candle here closes above this high. And that then means this will become our valid high in the market. It's a strong high as well for internal structure. And then to look for our low, we look for the same sequence. We look for close up. So there's our close up, and that means that becomes our valid low. So right here becomes our valid weak low. Just like we saw this bullish move, we use the close down for the high and the low. We use the close up for the high and low when we're bearish. Now, the reason this is internal structure, let me zoom this out, is because of the way the market's moving. So we're going to see a potential sweep at these highs. Zoom this out, and this becomes our low. So we do have also within this internal structure of that internal structure, but that's a mouthful, so we don't look at this. So at the moment, the market is still currently holding bearish on internal structure, but bullish on that swing structure. As we just swept this high, there is potential for the market to continue to run lower. So once you understand that bias, again, like I said, you're going to be right 68% of the time. And what we look for now is we start looking down those time frames to see what we can find. So now we go down to a 4-hour time frame. What do we now see happen at the same time as we saw that daily sweeping? We see a 4-hour structure also shifting bearish. So just like we went through on that daily time frame, we apply the same structure again. We have a previous break of structure bullish here. This became our low because we saw the close down. The market then closes down here. This became our high. So we have our high and our low marked. We then break to downside, shifting our 4-hour structure. At the same time as we saw price taking that daily high and starting to sell off. Now, when we have a break of structure here, we look back for the last time we see it close up. It's that bullish candle. That means that becomes our strong high in the market. And that's why I've got that marked as a strong high. Now, after we see that, what do we look for? We look for the close back up to give us a valid low. There's a close back up for a valid low. And that's how simple this process is. Now, it does mean at this point, we could still see price want to pull back before we see a run lower. But at the time, we're still bearish until we start to see that reversal on a lower time frame. So when we start looking at this, our swing structure is bearish. We don't actually have an internal structure to mark here yet. So we drop down to 30 minutes. This is where you start to read price. At the moment, our last break of structure is to the downside. That's our swing move, and I'll walk through this step by step again. We see the market here breaking this structure low. Why? Because this was a previous close up which created a valid low in a downtrend. We then see the breakout. We look back for the last close up. That becomes a valid high. When we see the close back up again, that becomes a valid low. Now we have swept that low, which does indicate after retesting into this area, we could see a run higher break instruction. That's going to be following with the actual 4-hour time frame, putting in that valid low. And this is how we start reading that structure. Currently, no, until I see price breaking up and breaking this area to the upside, I've still got a bearish bias. I'm still expecting price to move higher, but it's how we read it on the lower time frames currently, and we can get in and out of that market. Now, I'm risk-free on this trade. I can't lose anything. I've already taken profit off the trade, and I can still see the market run to this low because at the end of the day, we don't know which way the market's truly going to go. We have to put the odds in our favor, and this is how this structure will put that 68% odds in your favor every time. When we see the market here, we also have an internal structure. This becomes an internal high and a low. We see the breaker structure right there. We look back for the last time we see it close down. Well, that's right here. This becomes our low. Then we see another close down here. This becomes my high. So now we have a bullish internal structure. But then we sweep the high. What does that normally show is the market will want to drop. So this is how we can start to read that structure. Now we understand that we are bullish on our internal structure, but sweeping a valid swing high. We're then also still bearish on swing structure. We've gone deeper into this area. The market is now showing us a shift out. So we can now pop down to a 1-minute time frame here. Before we wrap up, if you're tired of second guessing trades or still wondering why structure isn't clicking, this might help. I built a full 90-day system that turns structure into something you can actually trust, not just theory. It's what helped Danny rebuild after losing nearly 300,000. He didn't just learn structure, he finally knew what to do with it. If that sounds like where you want to get to, the link is in the description. Apply for access when you're ready. As we see the market shifting out. So simply reading the market here, this is where we see that sweep. This is where we see a reversal of structure. Start following that structure. We have a break to downside, another break to downside. Here's an area of previous supply, market held, a new area of supply where the market came back into where I've taken my trade. Where's my target? The low in the market. So we have a simple break, and we just go through this again. Break, pullback, continuation for the week low. There is my trade this morning in another trade. Now I'm still holding on to this trade in case we see a continuation down for that week low on the 30-minute, because we don't know where price is going to go 100% of the time. That's why this video is labeled 68% of the time will get your bias correctly. This is where you can start making your trades, understanding your structure, having that foundation and clarity when it comes to trading the markets. So that's a trade taken today on gold using this type of structure. If you want to learn this structure in more depth, step by step, do check out the video coming up next. It's going to help you to walk this through step by step.